Hello, everyone, and welcome to RedThread, where we discuss the latest developments in the global commodity markets. I am Tanya Rana, Senior Price Reporter from APAC Agriculture Team. Today, I'm joined by my colleague Dipanshi Agarwal. Hi, Dipanshi.
Hi Tanya and hello everyone. I'm Principal Analyst on the APAC Crops team and I mainly look into Asian rice and cotton markets.
So, Dipanshi, we have been closely watching developments in the Middle East, with US Iran negotiation failing to conclude and tensions in the Middle East persisting. How is this impacting the global rice markets?
So Tanya, these tensions are hitting the markets on two major fronts. Firstly, production cost and secondly, trade logistics. Let's first talk about the production costs. The crisis has driven up crude oil prices, which in turn have led to higher fuel and fertilizer cost for the farmers. In key countries like Thailand, Vietnam, and Indonesia, farmers are facing a severe squeeze and are uncertain about planting new paddy crops. The situation in Thailand is particularly critical, which imports about 30% of its fertilizers from Middle East. We are hearing that farmers are already reducing the fertilizer use. And if I talk about India, while the Indian government has diversified the urea imports, this reliance remains a risk, especially with the potential El Nino threatening the monsoon.
And what's interesting is that these cost pressures are now directly reflected in export prices across Asia. Prices are holding firm. Thailand's 5% broken white rice continues to trade at a premium at around $384 per metric ton FOB. Vietnam close to $375 per metric ton, followed by Myanmar, Pakistan, while India remains the most competitive at the moment, roughly around $343 per metric ton. But pricing isn't the only factor driving buying decisions. Demand from the Philippines, for example, continues to favor Vietnamese and Myanmar rice despite the price differences. On the basmati side, the market remains strong, supported by steady demand from the Middle East. India's 1121 steam basmati is currently assessed at around $1,064 per metric ton FOB containers, trading at a significant discount of nearly $180 compared to Pakistan's 1121 steam.
Exactly, Tanya. So now let's continue on the two factors which I talked about. So beyond production cost, the logistical chaos has become a nightmare for exporters. The conflict has pushed up freight rates by over 40% on some routes and with the shipment delays of 15 to 20 days. India has reportedly seen around 400,000 metric ton of rice shipments stranded. Thailand's export to Iraq are down sharply as buyers are postponing purchases. Even Vietnamese exporters are now renegotiating the contract to share the rising cost.
Indeed, that logistical impact is a key factor we are hearing from all the sides. It's not just freight rates, we are also seeing fuel shortages, container shortages, and even unavailability of packaging material. This is forcing the buyers to delay their purchase decisions or switch suppliers. And exporters are increasingly shifting to FOB terms to avoid freight risk. However, demand is present, but it's uneven. The Middle East remains a strong buyer, especially for basmati rice. China right now is more cautious. There's interest in broken rice at the moment, but higher freight cost and regulatory uncertainties are slowing down trades.
So, putting it all together, the market is in a tug of war. Weak demand and shipping impediments are pulling prices down, while rising production costs are building a strong floor. So, if these tensions persist for a month or so, our production and export outlook will be fundamentally bearish. The greater risk is of supply side shock.
I agree. Market participants expect prices to remain supported in the near term, driven by these elevated cost and logistical constraints. But as you said, the rising fertilizer and fuel costs are influencing planting decisions, especially in key exporters. Key exporting countries like Thailand, Vietnam, and even US, which could add supply side pressure down the line.
So, to conclude, it's a double blow for multiple countries scarce inputs and potential El Nino. Any production shortfall will translate into a smaller exportable surplus and a significant upward pressure on global prices. So that's it for today's session. I want to thank Tanya and you, the listener, for joining us. If you found this discussion useful and insightful, we have more in depth analysis on the rice markets. Do get in touch with us to find out more. Thanks again and see you next time.